interest rate hikes could come sooner than many of us had hoped. The Reserve Bank has changed its inflation outlook, meaning that, if anything, interest rates are likely to go up this year. For now, though, the Reserve Bank leaving interest rates on hold. South Africans enjoyed record low rates for some time, but the bank hiked the benchmark repo rate it lends to banks to 5.75% last year. The rate more relevant to the ordinary man on the street is prime at 9.25%. Now, interest rates are used to control inflation. Higher rates help to curb spending, which slows down the rate of price hikes. Currently, relatively low rates put more money in the pockets of consumers by allowing them to borrow more easily. That's good for growth, but the bank has to consider that low rates can spur inflation on in future.
Given the uncertainties related to the U.S. policy normalization and the weak state of the domestic economy, the MPC has unanimously decided to keep the repurchase rate unchanged for now.
A more hawkish tone from Reserve Bank Governor Lesetja Kganyago than in previous meetings. Inflation expectations are now on the rise. This due in part to a turn in international oil prices and the weaker rand-dollar exchange rate.
The impending fuel and road accident fund levies will have reversed a large part of the favorable impact on domestic petrol prices, which had declined by about 4 rands per litre between August 2014 and February 2015.
Kganyago noted that the rand would remain particularly vulnerable to issues outside of the country's control. It seems when the US Federal Reserve hikes rates, which is expected later this year, the Reserve Bank will be forced to do the same.
The expectations around interest rate hiking in the US have seen the dollar strengthen substantially. The dollar is on a massive run at the moment. And as a result, everything when compared to the dollar is weaker, the rand included. And the weak rand raises serious inflation risks because a lot of South Africa's consumer goods are imported.
The Reserve Bank is pegging economic growth for this year at 2.2%, with a mere increase of 2.3% for 2016. Electricity constraints being the biggest bugbear for growth.
When load shedding, it does cost the economy money. It does cost the economy's confidence. It plays a huge role in our future outlook. And what we're seeing, for example, from the central bank is that we're getting below 2.5% growth this year and next year.
Policy uncertainty appeared to be giving the MPC sleepless nights. It also noted that domestic factors like increased electricity prices, expected elevation in food prices on the back of drought, and potentially higher wage increases in excess of productivity were also on their radar as issues that may push inflation to the upside. Nompumelelo Siziba, SABC News, Johannesburg.